Howdy folks, I want to take you through what I've just spent the past few hours working on here and looking at. The stock market, the commodities market is in full-blown recession mode. And I very rarely ever do two videos in a day on this channel, but I thought this was important enough to bring to your guys' attention. There's a specific playbook, essentially, that the stock market and the commodities market runs by if the market is convinced we're going into recession. And let me be very, very, very clear. 100% of that playbook is being played right now. It is absolutely shocking. So, by the way, I hope you guys enjoy this as always. Hope you enjoy me bringing this to your guys' attention. And thanks for being subscribed to the channel, okay? So, United Rentals. I think this is a poster child stock for how this market is judging what's going to happen in the economy and when it comes to recession, right? United Rentals, the stock is down over 26% in the past 1 month. In the past 1 month, United Rentals is down over 26%. Now, if you've never heard of United Rentals before, you must not be in the construction industry, okay? So United Rentals, they'll sell you equipment, but they also rent just about anything you could possibly think of for building anything like in the construction industry, anything like that, okay? And so naturally, when the economy is good, like a company like United Rentals is going to do very well, right? Naturally, if the economy is very bad, there aren't a lot of big projects being done out there. There aren't a lot of homes being built. There's not a lot of spending going on. A company like this is going to be in a rough position, right? And so that's their business model. Now, we can see when the economy is good, they do very well for themselves. Look at what they did in 2014 for revenues, about $5.6 billion. They're doing nearly double that last year, right? $11.6 billion of revenue. Look at this company's gross profit just over since 2014. It's over doubled their gross profit, right? Absolutely incredible. The numbers are incredible, right? But this is the shocking part. And wait till I show you the scariest part of this whole story. Oh boy, you're going to be amazed by that, okay? Check this out. In 2014, this company does $540 million in net income. This past year, $2.1 billion, okay? Which goes to show you if they can double their revenues, triple their revenues, something like that, right? Even a double of their revenues, they could easily 3x, 4x, 5x their bottom line, which is substantial, right? But the scariest part, by far of this story, is look at how bad it can get for a company like United Rentals when the economy is not in a good place, okay? So if you remember 2010, 2011, 2012, weak years in the construction industry, obviously not a good situation, right? And look at the company's net incomes or net loss during those years. In 2010, they lost money. 2011, they had net income of $101 million. In 2012, $75 million. Now, the thing that should scare you about this when it comes to a company like United Rentals is imagine if, let's just say, they only earn $500 million of net income, right? And the economy gets much worse. Well, then obviously the stock has to drop substantially even from here, right? Because that's a realistic scenario. Like the economy was actually pretty good in these years, okay? 2013, 14, 15, 16, construction industry was pretty strong. Now, was it nearly as strong as the last couple of years? Absolutely not. But this was kind of almost like a blow off to the top scenario because of cheap money fueled out there. Plus, you had a good economy for a long period of time, a lot of confidence out there. And so you could see anything from arenas being built, hotels being built, right? Apartment complexes, homes, like almost everything, warehouses, almost everything has been pretty much at all-time highs in the past 2 years specifically in regards to construction spending out there, right? Which is just a huge, massive benefit for United Rentals. But if we're coming to the end of that, then likely United Rentals is headed toward these sorts of net incomes, right? And this is if you expect like an apocalyptic type construction industry, right? This is just if you expect like a decent construction industry. These are the sorts of numbers they're going to, which means a company like that has to fall substantially more from here, okay? Now, keep this in mind, right? This goes back to 2008, 2009, 2010, 2011, 2012, 2013. During those years when the construction industry was bad, right? This was a $10 to $50 stock. A $10 to $50 stock. It's a $300+ stock as of today, right? And that's even after we just watched this stock fall 26+% in the past 1 month. Still a $300+ stock. And so you got to understand, if the construction industry is to get bad for any reason, if the economy was to really fall off a cliff like we did in the great financial crisis, not saying that's going to happen, but if it did, you got to understand this baby's going back to under $50 a share in a scenario like that. Now, let's say that's not the scenario, but let's just say we continue to have construction get in a worse and worse place over the next 6 to 12 months. Is it impossible to imagine the stock falls another 50% from here and falls to $175 a share? I don't think that's out of the realm of possibility at all. And that's the scariest part when it comes to a lot of these companies like United Rentals, for instance, right? Caterpillar, cat stock, has lost over $20 billion of market cap just in the past 1 month, okay? It's down over 16% in the past month in regards to Caterpillar, right? Now, the difference between a Caterpillar and United Rentals is Caterpillar's not nearly as much up and down as United Rentals. If Caterpillar had to choose, would they want a good economy or bad economy? For sure they want a good economy and a strong construction industry. But the bottom line is with Cat, they're much more stable than a United Rentals. But at the end of the day, still Caterpillar's stock has been hit significantly, right? Now, next thing up here, okay? Let me ask you this question. And anybody that's been in the stock market or paid attention to the money game for a long time, I hope you know the answer to this, okay? When people are scared, I shouldn't say people. When people are scared, they put their money in a mattress, right? Under the mattress, as they call it, right? They just hold cash or whatever, right? When investors are scared, where do investors put their money, okay? I hope every single person out there understands, like, this is the average of like what an investor does with their money when they're scared. Now, for folks that watch my channel, you might say, well, when I'm scared of my money, maybe I just go to cash or something like that. But for most investors out there, okay, they put their money in one place when they're very scared about what's going on with the economy, a lot of volatility, and they don't know where things are going. And that place is this place, gold. Gold has surpassed the 2011 all-time high. It is now at a new all-time high. Gold, GLD. This is where always investors like to hide out when times are scary, when they're concerned with everything going on out there, okay? It's also a place they like to go when they feel or they see that there's significant money printing coming or it's either going on at that particular time. Which is why gold hit an all-time high, a previous all-time high in 2011. Because at that time there was double-dip recession fears. We were just coming off of a massive financial crisis. Unemployment was still super high, right? And so naturally at that particular time when it comes to gold, people flooded money there. Plus the government was obviously had stimulus packages out there and just flooding money out to the market that we hadn't really seen throughout, honestly, the history of the United States. It was incredible, right? And so naturally you saw gold go up to an all-time high. Then as things stabilized over the coming years, unemployment started to go down, we had a more normalized market. What ended up happening for gold for years is gold went what's called dormant, and it didn't do a dang thing for years and years and years. Then 2020 happened, a once-in-a-100-year health event, boom, gold spikes back up, and ever since then, gold's been in an elevated place until a new all-time high, literally today, for gold, okay? That shows you how concerned the market is. But what else? There's another something that investors like to put money in when they're very concerned about what's going on out there. Where is that? Well, it is silver. Silver's another place, okay? It's not as popular as gold, certainly, but it's another place. And check out silver. Silver's on its way. I mean, if it could just keep an upward momentum for the next month, this baby's on the way to getting close to a 10-year high. Silver's, as far as SLV, flirting with $23 right now. The 10-year high for silver is $26 right now, okay? And so is it impossible for silver to go there? No. I mean, at this pace, silver could be there in a few weeks from now, to be quite honest, right? If this pace continues. And so this shows you where people or investors are putting money right now. They're putting money into gold and silver, but it's not just that, okay? If you look at natural gas in the Great Financial Crisis, this is a chart of natural gas in the Great Financial Crisis. Natural gas fell 80% plus in the Great Financial Crisis, right? I mean, absolutely extraordinary move for natural gas in that situation. It was bad, right? But what about today? What's going on with natural gas right now? This is a 1 year of natural gas. Over the past 1 year, natural gas is down 64%. That is not from the highs. I could easily cherry pick the highs and we could see natural gas down like what? 70, 80%, right? This is just the past 1 year. 64% drop for natural gas, which just is another telltale sign of the market believing 100% it's convinced recession is here, okay? Investors love to hide out in utilities, okay? Yes, utility stocks, the most boring stocks. No one wants a piece of these stocks ever, except for a situation where people don't know where to put money other than maybe gold, silver. And utilities is a place where people put money in those certain time periods, right? And shockingly, utility stock after utility stock is hitting all-time high right now, okay? This is a utility giant, Consolidated Edison, okay? Con Ed, as they call it, right? And you got to think, right? People always need electric. People always need water. Recession, no recession, doesn't matter, okay? And you look at Con Ed, I mean, this company is at pretty much an all-time high right now. Literally an all-time high in the history of their company. While countless other stocks are still down 20, 30, 40, 50, 60, 70, 80%, whatever, right? This company is sitting there doing just fine and dandy, right? I can tell you these stocks won't always be hitting all-time highs because people get bored of them and then they'll their stock price will go down. But I can tell you in this sort of market, this is where people like to hide money. Duke Energy. I remember Duke Energy from when I lived in Charlotte, North Carolina. I can certainly tell you that, okay? Look at Duke Energy. Recently, this stock's been flirting with, guess what? An all-time high in regards to Duke Energy. Isn't that incredible? It goes a bit further. American Waterworks Corporation. What a name for that. Okay, Mr. Monopoly, here we come. This is just the past 3 weeks. The past 3 weeks. 3 weeks, okay? How do you say weeks in Spanish? Look at this. Up 12%, almost 13% in 3 weeks. This isn't Tesla stock. This is a water company. A water company up almost 13% in 3 weeks? That's fishy. That smells like the market is 100% convinced recession. We need to flood money to utilities. And my gosh, there's a flood into utilities. That's a water flood into these babies, okay? American Electric Power is flirting with an all-time high and getting close to being up there right now at this point in time, right? And so you just look at all these utilities, and it's clear as day money is flooding to these babies left and right now, which is in the recession playbook. This is lumber, 2006 through 2009, okay? Now, a lot of people assume that housing peaked in 2007. False. The housing actually peaked in 2005, 2006. In terms of new home orders coming in terms of what people were able to realistically sell their homes for, everything peaked actually around 06. By the time you got to 2007, the market had already started coming down. A lot of the hot markets were already starting to show major weakness, whether it be Phoenix, Vegas, Miami, and many other hot markets, different markets in Texas, Florida. They were already starting to show weakness actually in 2007 before the great financial crisis, and most people recognized it as that, okay? And so there was a very interesting scenario we had play out there, right? And meanwhile, 2006 through 2009, lumber price fell nearly 50%. It was nearly cut in half. Well, what's happened recently with lumber? Check this out, okay? This is the past 22 months in regards to lumber. Lumber is down 73% in the past 22 months. Isn't that incredible? Which just goes to show you how much weakness there is in really like residential real estate and how much weakness I think there's going to continue to be in residential real estate. The fact that lumber prices have collapsed to these sorts of numbers. So lumber is still trying to figure out in this bottoming process where the bottom is. I can tell you based upon that chart, it's not really showing that it's necessarily found the bottom yet. It seems like it's in a bottomish process, but we don't know if lumber's really on its way to the $200 range. It definitely could be on its way there, especially if residential real estate gets any worse over this next 6-12 months, okay? If it picks up over the next 6-12 months, we might see a different situation, but if it gets worse, you're going to see lumber in the 200s, which is absolutely incredible, which follows right in with the great financial crisis. A company like Whirlpool, perfect example of a company that is seen as, we're confident the economy is going to do better and better and better. Housing is going to do better and better and better. Whirlpool benefits from that, right? This is the past 22 months in regards to Whirlpool stock. This stock has been basically cut in half. It's a buy one, get one free from where the stock was 22 months ago, right? Which goes to show you lumber and Whirlpool specifically are basically showing that there's no confidence that residential real estate is going to fix itself or going to be fixed, let's just call it in the short term. And we got more pain to go in the residential real estate market, okay? A company like Whirlpool obviously benefits from new homes being built, from people moving, from new apartment complexes being built, all that. Whirlpool benefits from all that. But if there's a lot of confidence that residential real estate is going to be really weak, right, which means no new fridges and new homes, right? People aren't going to really be moving, which a lot of people like to buy new appliances when they move homes, if they're in the financial position to afford that, okay? When less people are moving, it's not good for a business like Whirlpool. When it comes to apartment complexes, Whirlpool definitely sells a lot of their lower end appliances to, new apartment complexes and whatnot. And so if there's not much confidence that you're not going to have a bunch of new apartment complexes, people aren't really moving right now, and you're not going to have new homes, Whirlpool's stuck in a position where basically they're just trying to sell to people that need new appliances, right? Because at the end of the day, like, people's ovens are going to break and fridges are going to break and microwaves are going to break and different appliances. And so that's great. So Whirlpool's always going to have a certain amount of business. But the problem is that the cream of their business is really all the new homes being built, people moving, apartments, all that stuff. That's the cream. That's the next big profit lever. And it seems like they just don't have that right now and might not have that for the next 1 to 2 years. And so for that reason, what does Wall Street do with this stock? They completely dump out of it, and they sell it down nearly 50% just in the past 22 months. It's incredible when it comes to a company like Whirlpool. Look at a company like Micron, right? This is the biggest memory chip company pretty much in the world, or certainly one of the biggest, right? One of the big three, people would call it, right? When it comes to MU, this is a stock over the past 15 months. The stock is down 41%. That's another stock screaming recession. At the end of the day, if there's less spending activity out there, it hurts a company like Micron. And people are convinced that Micron's going to continue to be in a bad spot for, let's call it all of 2023, with maybe an upcycle coming in 2024. And so people aren't really moving money into this stock yet, right? It's up, it's down, but it's another one of those stocks it's still forming a bottomish process that's going on here with a company like Micron over the past 15 months, right? And look at Walmart. If you think about the most needs-based company you could possibly think of, right? Think about Walmart. And look at Walmart. It is right there. It is so close to an all-time high on that stock, right? Which goes to show, if there's fear about a recession, right? If the market's convinced of recession's coming, right? Well, Walmart's a place that people love to hide. It's almost like a utility stock, right? It's needs-based. At the end of the day, Walmart's going to put up their numbers regardless of the economy. And that's just a view out there. And look at that, baby, okay? And so for all longs out there in the market, just understand the mode that the market's in right now. The market is in recession mode right now. That's what the market is convinced of, okay? And so you've got to take advantage. You've got to see opportunities out there. If you're a short-term trader, I can understand trying to follow Wall Street around into these plays. If you're a longer-term investor, don't get caught up into flooding into these utility stocks or any of these other stocks that are the hot stocks right now, because we don't stay in this mode forever. You may be in here for 6 to 12 months, no different than the commodity super cycle that a lot of people got sucked into last year, right? I knew that wasn't going to last. That's not going to last. You can have commodities be on a super cycle for a little bit of time, and that baby comes crashing down. And look what's happened with nat gas, oil, oats, anything, lumber. Like, you look at anything commodity related almost across the board over the past 12 to 24 months, and they're all down massively, right? And so with these, they seem as like the safe play right now. But I'm just telling you, there's going to be tremendous opportunities in other places in the market that you've got to take advantage of. As somebody that got started in the market 08, 09, I got sucked into so many of the safety companies. Many of my first companies I was investing in were the Walmarts. I was an investor at Walmart back in the day. Conagra Foods, Kimberly-Clark. I got sucked into a lot of the safety plays because I was like, oh, that's where people put money. I would study the market. I'm like, oh, this is where people put money because these are needs-based companies. All along, there was like so many better stocks that were so heavily discounted during that time that over the next 3 to 5 years went up hundreds of percent, thousands of percent. And meanwhile, many of those stocks that I had invested in those early days never did a dang thing. And were just, slightly up. I collected some dividends, but there wasn't much money to be made there. And that's when I learned a lot more about this game about, certain stocks are beaten down much more in other markets. That's when you got to take advantage of those opportunities out there. I appreciate everybody joining me as always. Hope you enjoyed this video and me kind of taking you through everything. If you're looking to take your investing game up to the next level and learn everything I've learned over the past 15 years up here, and you want to download to your mind, apply to join my private stock group, private wealth group. That will be the pinned comment down there. Much love as always, and have a great day.